and I'm trying to decide which one we talk about first. I don't think I even mentioned Generac in our intro. So let's talk about Generac. Interesting company. We were talking before we started recording that there's a very strong seasonality associated with this stock. So basically, Generac, if you're not familiar, they make and sell generators for residential and commercial use. And so I thought this was an interesting one to bring up today, as we here in New England are getting the remnants of a tropical storm. And as we're recording this, people throughout southern New England are currently losing their power. And so, yeah, here is the Generac seasonality. So you can definitely see June, July, August, hurricane season. October is an interesting month there. But we were talking before we brought up the chart. We were talking about like I was kind of speculating they're going to be summer and winter are going to be the two strong seasons because hurricanes and winter storms, ice storms, blizzards, etc. That's not exactly how it ended up working, but the summer seasonality is really, really strong. And Todd, if you could pull up the chart for Generac too,
I will.
It's a really impressive chart.
Yeah, just to give our listeners a little bit of a feel for this. I mean, I was thinking about how much demand there could be for external sources of power production when you think about what's going on right now with the drought in the Midwest, or when you think about the ice storm and what happened with power in Texas. And we talked about that on the show, when that happened. But I mean, a lot of the power that's generated for California comes from hydro. And, with the drought conditions the way they are, you have to wonder at what point do people really, really ramp up redundant sources of power? And if we are going to have massive heat, the use of air conditionings and everything else going up, I mean, that's a huge variable demand driver. Friedberg, actually, from the All In podcast, if people follow him on Twitter, had a great tweet thread on drought in California and what it could mean. And I think that I can never say it right. Generac,
I believe.
Yeah, Generac typically does well in we just talked about the summer seasonality with the hurricane season, how that oftentimes will force or drive people to, get the supplementary sources of energy. It's over the last 10 years, Joe, up 7 of the last 10 third quarters, with an average return of 12.5% and a median return of about 11%. And let me go ahead and pull up for our listeners. Let me go ahead and pull up the chart of that. I'll go ahead and share my screen. While I'm doing that, just a quick shout out to thank everybody for their support on both the podcast and on our YouTube channel. We're just thrilled to see so many people engaging with us on YouTube and through the pod. And please smash the like and subscribe to see all the content. We're doing our best to try and keep you in the know with our weekly chat about stock. So here's the chart I'm showing for Generac, and you can see it's already had a huge move, Joe. Breaking out of that base around 365 that had been forming since February, did that in mid-June, and then it's been pretty much a straight line up from there with only 3 down days since, when is that? Since June 9th.
That's amazing.
Yeah. So, and this is a very profitable company. I mean, look at the year-over-year revenue growth in the March quarter, 70% year-over-year revenue growth. And if you look at the earnings growth, in 2021, up 55%, expected to $10. And in 2022, growing an additional 13% to 1138 is what's forecast. But yeah, you know how I love those blue on MarketSmith anyways. Instead of green and red, they did blue and red. But I just love those blue bar volume days on these up days, and just not a whole heck of a lot of energy to sell it.
Yeah, absolutely. And they're predicting another above average active hurricane season. So assuming that's what's driving Generac's summer seasonality, definitely worth looking into. I added it to my watch list earlier this week, and I'll probably look for a down day really at any point in the next several weeks, say until the end of July, to enter, whether it's a 1.5 to 2.5% down day. We'll see. We'll see if we get one.
Yeah, ideally, Joe, what I would be looking for here is a pullback to the 21-day moving average, which in this case would be about an 8% pullback. Ideally, if it can touch that 21-day moving average, bounce around and rally off of that, that would be awesome. They typically don't stay, multiple moves above the 21-day moving average forever. The 21-day moving average catches up to it, or it falls to.
Gotta come back to earth at some point, right?
Yeah.
Yeah.